हेलो फ्रेंड्स, सेंट्रल बैंकिंग के महा रिवीजन सेशन में आप सभी का स्वागत है। ऑल ऑफ यू काइंडली वेलकम टू द सेंट्रल बैंकिंग इलेक्टिव महा रिवीजन सेशन। देखिए, ये जो सेशन है मैं मोस्टली इंग्लिश में ही कंडक्ट करूंगा, क्योंकि क्या है, इसके जो भी क्वेश्चंस है वो पूरे इंग्लिश में ही है। सो विल ट्राई टू कवर मैक्स इन सिंपल इंग्लिश, बहुत सिंपल इंग्लिश में लूंगा मैं, जो हर किसी को समझ में आएगा। क्योंकि क्या है कि पूरे क्वेश्चंस एग्जाम में भी आपको क्वेश्चंस इंग्लिश में ही पढ़ने हैं, है कि नहीं? तो हम लोग पूरा उसी एंगल से जाएंगे। जहां जहां हिंदी होगा विल कवर हिंदी ऑल्सो। ओके, so welcome to the central banking maha revision. Kindly like the video, subscribe to the channel, click on the bell icon. ये मत भूलना। Okay, let's start. Which of the following instruments will affect the financial stability when traded without regulation and supervision? अगर रेगुलेशन एंड सुपरविजन ना हो तो विच इंस्ट्रूमेंट विल क्रिएट अ ह्यूज प्रॉब्लम? डेरिवेटिव, मनी बिल, बॉन्ड, ऑल ऑफ द अबव? think. Is it all of the above or is it money bill? See, which is the most dangerous instrument in this? Which is the most dangerous instrument in this? Which will create a huge problem if traded without regulations? Is it derivative? Is it money bill? Is it bond? Or is it all of the above? Yes, the answer is financial stability will be affected. Derivative. Okay, the answer is derivative. Derivative is the most dangerous instrument. What is derivative? You might have studied this in BFM also, right? पढ़ा होगा ना? What is derivative? It is derived from some commodity, from some base, right? We have gold derivatives, we have stock market derivatives. You need something as a base, and based on that उसके ऊपर derivatives are formed. Call, put, options, right? Swaps, forward rates, futures. What are these? Derivatives. Remaining money bills are a bit easier because they are very stable instruments. Bonds are also moderate risk, moderate. Lowest risk is money bill, very less. See, kindly remember there are three types of markets. Okay, one is equity. Second is debt. And third one is money market or liquid. Okay. So this derivative comes under this part, equity. It is based on equity, okay? But after all, risk part is this. Money bill comes under this part, liquid. And bond comes under this part, second, moderate, debt. Okay? Lowest risk, medium risk, highest risk. Okay? Next. Case study. Question number 1 to 5 is given. You have to read this and solve question number 1 to 5. Will follow, that will be following. A non-banking financial company, NBFC, is a company registered under the Companies Act 1956, engaged in the business of loans and advances, acquisition of shares, stocks, bonds, debentures, securities issued by government or local authority or other marketable securities of a like nature, leasing, hire purchase, insurance business, chit fund business, but does not include any institution, does not Kindly note this. Any institution whose principal business is that of agricultural activity. We are talking of NBFC over here. Okay? Industrial activity, purchase or sale of any goods. So it does not include this also. Industrial activity, purchase or sale of any goods, or providing any services, and sale, purchase, construction of immovable property. So what is NBFC? See the big definition of NBFC. NBF, F is main, financial. So if there is nothing financial, see agribusiness, nothing financial. Industrial activity, manufacturing, purchase, sale, all these, nothing financial. Providing any service and sale, purchase of immovable property, right? Not related to finance directly. A non-banking institution which is a company and has the principal business of receiving deposits under any scheme or arrangement in one lump sum or in installments by way of contributions or in any other manner is also a non-banking financial company. Residuary non-banking company. Read this again. Read, everyone, read this again. Everyone do this. Read it again. Okay, read this again. Very important. Now we'll be having the questions on this. Okay? Everyone read it. I'll wait for 1 minute. Yes, read it. So now, first question. What is the first question? See, everything will be related to NBFCs. What is the minimum net owned funds required by NBFC to get a license from RBI? What is the minimum net owned funds? What is it? Net owned funds required by NBFCs to get a license. 10 blah 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 blah. Let me think. Yeah, what are the minimum net owned funds? What is the answer? Yes. Now there is a change in this because earlier the answer was 2 crores over here, 2 CR. But now this has been increased. See what has been increased over here now? There are some changes which have happened recently. What are the changes? See, the changes made are related to number one, 5 crores and 7 crores. Okay. They have made two changes now, 5 CR and 7 CR. 5 crores and 7 crores. These are the two ones which are required. Okay. 5 crores are for NBFC, ICC, NBFC, ICC, Investment and Credit Companies, NBFC, ICC. And second one is NBFC 7 crores, NBFC MFI. MFI means, you might be knowing this by now, MFI means microfinance institutions. Okay? Microfinance institutions. There is a third criteria which they have made. that is 10 CR for infra financing companies, infra NBFCs, infra financing NBFCs, not infra financing. So these are the three changes which they have made. 5 crores, 7 crores and 10 crores. 5 crores are for NBFC ICC, investment and credit companies. 7 crores are for NBFC MFI, microfinance institutions. 10 crores are for infrastructure financing microfinance companies. Okay? Got it? So these are the changes which have been made. So in exam also they will make the changes now. They will not ask you the simple 2 crore question. See, if you are lucky enough, you will get this 2 crore question. Because even in your books today also, your book says 2 crores. But the recent changes are these. Okay? But your book still says 2 crores. So if you are lucky enough, you will get the question of 2 crores. Otherwise, these three separate questions will come. Okay? So this was question number 1. Question number 2. What is the minimum asset size of NBFC SI? Systemically important. NBFC SI, systemically important. What is the minimum asset size of NBFC SI? Systemically important. Think now. Everyone think of this. Is it 100, 200, 300, 500? Is it 100, 200, 300, 500? Yes. Systemically important. What is systemically important? Systemically important means that NBFC which if it collapses, there is a huge ripple effect on all the companies. If it collapses, there is a huge ripple effect on all the companies in the financial sector. Okay? So there is a ripple effect. Ripple effect means one company, see this, company X, it fails, okay, means it becomes down. Okay? So in this case what happens? This company X has issued debentures, okay? Debenture. What happens because of this? This debenture is purchased by, let's say, Bank A, NBFC B, okay? Or something more like this. It will go on. What happens? If this institution X fails, then these debentures become zero. If these become zero, what will happen then? Bank A's balance sheet or this NBFC B's balance sheet will have these debentures and they will be shown as investments, as assets which are earning interest, coupon. But this will lead to what? This will become zero. So these assets will become NPAs. So all the banks will face a cash crunch or their balance sheet crunch in their banks. This is called a systemic effect. Systemic effect, SI. What is the answer for this but? Then systemic I explained you, but what is the minimum capital or asset size? It is 100 CR, 100 crores, okay? 100 crores. Which of the following NBFCs are not under the regulation of SEBI? Not under the regulation of SEBI. Stockbroking companies, merchant banking companies, nidhi companies, companies running collective investment schemes. Which of them are not under the control of SEBI? Is it stockbroking, merchant banking, nidhi, or companies running collective investments? Who are not there? Think. It is. All of them are under SEBI. Only Nidhi company that is not under SEBI, not under the regulations of SEBI. Why? Because Nidhi company operates for, why does it operate in agri sector? It operates. Okay, it operates in agri sector. Nidhi companies are private companies only, but they operate in agri sector. Nidhi are same as chit funds. Okay, similar to chit funds. Okay. Next. On the basis of their function, in how many categories are NBFC divided? So NBFCs are divided in how many categories? Is it for 10 categories, 11, 12, 13? My God. So many categories are there. On the basis of their functions. Functions, okay? They are divided into how many categories? Yes? There are two classifications of NBFCs, okay? There is one classification which says 4 categorizations, 4. Base layer, middle layer, upper layer and top layer. Top layer is empty still. Upper layer is, which is the specifically pointed out by RBI. Okay, that is upper layer. Base layer and middle layer. Below 1000 CR, above 1000 CR. Business. Base and, but that is separate classification. This is separate. This is based on the functions. Functions means, what am I doing? Am I financing infrastructure? Am I taking the deposits? Am I not taking the deposits? Like this. So these are how many classifications? Yes, 10, 11, 12, 13. How many are there? It is 11 classifications. 11. Okay? 11 classifications are there. Next. Last question from that case study. Which of the following NBFCs collect and provide information about a customer's financial assets in a consolidated, organized and retrievable manner to the customer or others as specified by the customer? So who collects the information of the customer about the financial information of the customer? Who collects? ICC, CIC, NOFHC and NBCAA, NBFCAA. What is the answer? Collects information about the financial assets. Okay? Financial assets. So this is done by NBFCAA. AA means account aggregator. Kindly note, AA means account aggregator. Okay, account aggregator. What is account aggregator? Anyone of you knows? This is a new system, or you call it father of CIBIL. CIBIL का बाप. Father of CIBIL. I'll explain you. What is it? See this. CIBIL collects what? CIBIL. CIBIL collects what information? Your loans, earlier loans. Have you repaid the loans properly? Yeah, the EMIs are paid properly. Was there any deferment? Okay, means mismatch. Right? This is collected by CIBIL. Right? Then what does account aggregator do? Account aggregator is the father of CIBIL. It's a father of CIBIL. Means, father of CIBIL means what? It will collect more information. More information it will collect. Right? What more information? What will it collect? What more information will it collect? The information which it will collect is, number one, Loans. Loans it will definitely collect. So this is obviously there. Other than that, it will know the information of your savings account, your current account, your utility bills. Do you pay these bills? Utility bills. Utility means light bill, electricity bill, all this. Shopping habits. Shopping habits means how do you shop? Shopping habits. Okay, all this information. How many times you go to the malls? How much do you sell, purchase in the mall? How many times you go to the movies? Everything is covered under A, but with your consent. With your consent only, not without your consent. Very important. Otherwise you will say, sir, it will do anything only with your consent. If you don't give the consent, it will not collect. Got it? So it is NBFC AA, account aggregator. This is a new system which is developing. Okay? So the case study is over here. Next, read this. When has RBI introduced the primary dealer? PD means primary dealer in the government securities market, JSEC market. When was the primary dealer introduced? When was it introduced first time? Think everyone. When was the primary dealer introduced first time? Think. Yes. Primary dealer was introduced in 1995. Okay, 95 it was introduced. 1995. Okay, 1995. Got it? Next. What is the frequency of revising PD-wise liquidity support based on the market performance? Primary dealer wise liquidity support. Liquidity support is given by RBI to the primary dealers. Means RBI gives money to them. Against, of course, against the securities. PDs will give them securities, promissory notes. Based on that, RBI will give the finance to them. That finance is to be paid back by the primary dealers within 3 months. Within 3 months, okay? Otherwise, there is a huge fine. Okay? So now, what is the frequency of revising this liquidity support? What is the frequency? Is it annual, half yearly, quarterly, monthly? Think everyone. Think of it. Everyone think of it. See, what is the primary dealer? Primary dealer has to, primary dealer has 2 jobs basically. Okay? RBI will sell the bonds. See this. RBI will sell the bonds. Sell. Okay? RBI sells the bonds. To whom does RBI sell the bonds? Who purchases the RBI bonds? These are purchased by banks. Banks. So do you mean to say that RBI will go to each bank, sir, kindly purchase the bond. Sir, kindly purchase the bond. Will it do that? No. What will it do? It will appoint an agent. That agent is called as PD, primary dealer. Primary dealer deals in all types of bonds, means even the treasury bills, even the dated securities, even the CMBs, cash management bills. All the bills are handled by this. Okay? Primary dealers. Very important point. Okay? Very important point, everyone. Kindly note. Okay? So now the point over here is the liquidity support given is handled, means is revised annually, half yearly or quarterly. Monthly, leave it. So the answer is half yearly. Half yearly, that support is always revived, always checked. Okay, revised. The liquidity support availed by PD will be repayable within the period of, just now I told you, the liquidity support provided by RBI to the primary dealer will be repaid within how many months? I told you just now, right? I told you just now that it has to be repaid within how many months? Just now we discussed. It was 3 months, 90 days. It has to be repaid in 90 days. Otherwise, fine. Huge fine. It is base rate plus 5%. Whatever is the repo rate going on, benchmark plus 5% extra. Huge it is. 5% is a huge amount. What is the minimum success target percentage set for primary dealers in primary auction of treasury bills and cash management bills? See this. I told you earlier, primary dealer is a very important topic, and you will get a lot of questions on primary dealers in central banking. Very important topic. So, is a primary auction of T-bills and CMBs. See, primary dealer mainly deals in CMBs, treasury bills and dated securities. Dated is also there. So each sector, they are having separate targets. Each sector they are having separate targets. So what are the targets for T-bills and cash management bills? 50%, 40%. Success ratio. Success means what? Success means whatever I bid for. Suppose if in a year I bid for 100 rupees bonds issued by RBI, I must at least get 40 rupees bonds. I must purchase. If I say I have bidded for all of them, but you are not giving me, it means I am not bidding properly. I am bidding for the lower rate, isn't it? You are ready to sell at 50 rupees. I am bidding for 20 rupees. I will bid for all the offers, but I will bid for 20 rupees. I will not get anything. I will say I have bidded, but you didn't give me. Why didn't you give me? Because the rate was not matching. That's what is RBI saying. You must match the rate. So the success rate is 40%. Very important. Success rate is for treasury bills and cash management bills is 40%. And that of the dated securities, there the ratio is different. There the ratio is 1:3. Means if your T-bills are T-bills, you are bidding for 1 rupee or 1 time. So your success ratio or your biddage in dated securities, dated means what? Long term. Kindly note, RBI issues 3 types of bonds. These are the 2 ones, T-bills and CMBs. These are short term. CMBs are up to 91 days. Treasury bills are from 91 to 364 days. And after 364 days, it is called as dated securities. So the ratio for this is, if this is 1, this is 3. If you bid 1 rupee for treasury bill, you have to bid 3 rupees for dated securities. Very important. But what is the answer? Answer is 40% for T-bills. Kindly note. If you get the answer for dated securities, kindly note it is 1:3. If you get it for treasury bills, kindly note 40%. What is the mandated percentage set for combined CRAR of all the primary dealers? Mandated percentage of combined CRAR for all the primary dealers. Yes. Standalone PDs. Standalone PDs means those who are on their own. What is the percentage? Mandated percentage set for combined CRAR of standalone PDs. It is 15%. 15. Kindly note 15%. Okay? Got it? It is 15%. To raise the savings to GDP ratio to facilitate a higher level of investment necessary for breaking the vicious circle of poverty and facilitating the growth process. This task assumed a paramount attention of Reserve Bank, particularly in the absence of such a big question. See, this is a goal, and this task or this goal achieved importance when? Means because of, in absence of what? Or in absence of in absence of so in absence of efficient financial intermediation, lack of depth in capital market, and prevalence of large segment of indigenous banking, and all of the above. So when did this assume the importance? Everyone. And why did this assume the importance? The answer was everyone. What was the answer? The answer was all of the above. Okay, the answer is all of the above. Kindly note this. Okay, the answer is all of the above. Efficient financial intermediation, A. Lack of depth in capital market, B. Prevalence of large segment of indigenous banking, C. The earlier names of National Bank for Agriculture, name of Agriculture Bank, National Bank for Agriculture and Rural Development, NABARD, established in 1982 were, so what were the earlier names? The Agriculture Finance Corporation was established in 1963, Agriculture Refinance Development Corporation in 1974. So what was that earlier name? It was it this one, Agri Finance, or was it this one, Agri Refinance? Both were combined actually. See, these were two organizations. They were combined later. This was finance and this was refinance. Both were later combined to form NABARD. Okay. The Clearing Corporation of India, CCIL, was incorporated in 2001 to upgrade the financial infra in respect of clearing and settlement of. So what does Clearing Corporation of India do? Does it do the clearing of your checks? Name itself says clearing. What does it do? Clearing and settlement of what? Debt instruments. A is debt instruments and foreign exchange transactions. B is debt instruments, stock market and foreign exchange transactions. C is debt instruments, banking RTGS, foreign exchange transactions. D is both B and C. So what does it do? Does it do the clearing of your stock market? Or does it do the clearing of your RTGS? RTGS clearing is done by whom? It is done by RBI, NPCI. Stock market is handled by NSE, BSE and SEBI. Debt instruments and foreign exchange transactions. CCIL has these two jobs, main, debt instruments and forex. Okay. Bank reserves have been actively involved in financial institution building. Sorry, Reserve Bank, not bank reserves. Reserve Bank has been actively involved in the financial institution building. Most of the institutions were nurtured under RBI umbrella with a focused approach to. So why were most of the institutions nurtured? Means why were they allowed to prosper? RBI has many institutions. You have this in your topic also, in your studies. Allow them to become viable and independent over time. B is RBI to gradually shed these functions in order to ensure that no conflict of interest arises. C is both A and B, and D is none of the above. So, why did RBI form all these bodies or all these organizations within itself? Does RBI want to become then viable and independent over time? Or does RBI want to shed off these functions and make it independent? What is it? The answer is both A and B. Here, RBI has various bodies under it. FEDA is there, okay, plus others are there. They have to become independent. They have to work on their own. Viable and independent over time. Viable and independent over time. RBI has to gradually shed these functions in order to ensure that no conflict of interest arises. Shed these functions means it will give the function of forex management to FEDA. It will not look into it. Okay? That is the basic logic. Got it? Which of the following is true? Imperial Bank transformed into State Bank of India in 1955. 14 large banks were nationalized in 1969. 6 more banks were nationalized in 1980, and all of the above. Very easy one. Very easy. You all should be able to answer this. Very easy. All of you should be able to answer this. Yes? The answer is all of the above. Correct? The answer is all of the above. Got it? All of the above. Next. The history of central banking goes back to the 17th century when Riksbank was established as a central bank in 1668, which was recognized as the first central bank in the world. Where was the bank established? The first central bank was established as the Riksbank in 1668. My God. Where was this established? See the name also Riks. What is this Riks? Risk it should be, isn't it? It should be risk, but it was named Riks. Desktop, right? So it was, where was this established? It was established in Sweden. Okay, Sweden. It was established in Sweden. Okay. The Bank of England, known as the Old Lady of the Threadneedle Street, acted as a government's bank. Acted as a government's bank and a UK central bank. It issued banknotes, controlled the UK gold reserves, and since 1997. When was the Bank of England established? So, gold reserves. Okay. So when was the bank established? This Threadneedle Street. When was this bank established? Bank of England. It was in when was it? The answer is 1694. 1694 this Bank of England was established. Old Lady of Threadneedle Street. Okay, kindly remember this name. Which bank is known as Old Lady of Threadneedle Street? Just now we saw this. Bank of England. Okay. Which of the following events increased the power of central bank over money supply and price stabilization at the onset of the First World War? So what gave more powers to central bank when during the time of First World War? Notes became the legal tender, coins minting reduces, government policy, all of the above. So what gave the powers? More powers to central bank. What gave more powers to central bank? Yes? What gave more powers to central bank? Was it notes became the legal tender? Was it coins minting reduces? Government policy? All of the above? Many of us will think all of the above because all of them seem to be true. Answer is not this. Answer is A. Notes became the legal tender. Okay? Kindly note, as we move ahead as a human being, the cost of your currency, printing that currency, always reduces. Remember earlier old ages, you have read that history, we had gold coins. Then came copper coins, cost reducing, right? Gold, then sometimes silver, then copper. Then we had these coins minted by many governments. Then notes. Notes is still reduction. And now CBDC. So no cost, isn't it? Got it? The First World War increased the discretionary power of central banks. Which of the following steps is the main reason for increase in the power? The First World War gave immense powers to central bank. Printing of notes, formulating monetary policy, funding to smaller banks, trade of government paper in the open market. What gave the real power during the First World War to all these central banks? What gave the real power? Real power. Now, printing of notes is okay. We have studied this, but real power to central bank, real money to central bank came from what? Came from fourth, D. Trade of government paper in open market. Okay, this gave the immense power to the central bank. Now also, central bank has huge power in its hand. Why? Because of this ability. Government papers, dated securities, treasury bills, it can sell. Okay? Next. Now, next 5 questions. Okay? 6 to 10. Central banks perform the role of controller of credit as well as the other important functions of central bank include. So, central bank firstly performs the role of controller of credit. Number 1. Number 2. The other important functions of central bank include banker to government, banker's bank, holding monopoly of note issue, maintenance of internal and external value of currency, facilitating the development and payment settlement system, besides undertaking other development activities. The task of promoting growth and development is an important function in the case of central banks of developing countries. Big para, questions are based on this para. 5 questions, case study it is. Accordingly, central banks have assumed functions like development of markets, institutions and communication policies. So this is the paragraph given. Based on this, you have to answer now 5 questions. Now, kindly note, whenever we say based on this, it is not that the answers will be within this. They can be different also. This is just the basic framework given to you about the central bank. So let's look at the 5 questions. First one, which of the following factors will affect the nature and extent of the support from the central bank to the central government? So which will affect, okay? Affect the nature and extent of support from the central bank to the government. First, economic condition. Second, relationship between central bank and government. Third, constitutional provision. And fourth one, all of the above. Now, many of you are afraid of all of the above, isn't it? No. All of the above will not be true. So, you will try to answer between A, B and C. But the real answer over here is D, all of the above. Okay, the real answer is D, all of the above. Economic conditions, relationship between central bank and government, constitutional provision and all of the above. Okay, so support from central bank to central government. Okay, Most central banks act as the agents to their respective governments and manage public debt that the governments incur in a bid to bridge the mismatches in their revenues and expenses. So most central banks act as the agents to their respective governments and manage public debt. So they'll act as the agent wherever government finds any gap between its income and expenses. Central bank will try to fill in. Okay? So public debt that the government incurs in a bid to bridge mismatches in the revenues and expenses, right? To be effective in managing the debt, which of the following policies should be in close coordination with the monetary policy? Which of the policies should be in close coordination with the monetary policy? One is fiscal policy, second is constitutional provision, third is government policy, and fourth is none of the above. So which policy should be in tandem? Tandem means close coordination, okay, with the monetary policy. Actually, it's like this. This monetary policy is always a supportive policy. Main policy is always fiscal. So monetary policy has to support the fiscal policy. Kindly note this. Monetary policy has to support the fiscal policy. It's not reverse. Fiscal policy will not support monetary policy because fiscal policy is given by government, finance ministry. That is for the whole country. That is the main objective. Monetary policy has to adjust itself to this fiscal policy. Got it? It has to adjust itself. Got this point, everyone? So the answer is fiscal. What are the tools used by central bank to neutralize the impact of monetization of public debt? Monetization of public debt. What do you mean by this? Monetization of public debt. Firstly, let's look at the answers and then I'll tell you. Issuing additional debt to non-government sector, increasing the limit of CRR, sale of government securities, and all of the above. Firstly, give me the answer, then I'll give you the meaning. Yes. So, see, in the meantime, when you think, I'll give you the logic of this monetization of public debt. What is this? See, public debt means what? Public debt means whatever government has given to the common public. What has government given to the common public? It has given through RBI. What has it given? It has given notes. Public debt means notes. So these notes which are issued is actually a liability, isn't it? Liability on RBI as well as then in back end to the government. So if I am holding some 100 rupee note, it means I have given some loan to the government through RBI of this 100 rupees. So this loan needs to be filled in somewhere. This is the liability. So the government needs to have the asset. Simple, na? It's balance sheet, right? If this is my liability, or government's liability, issuing of notes is the liability of the government and RBI. So it needs to have the asset, equal assets to balance. What are those assets? That is the basic question. Issuing additional debt to the non-government sector, increasing the limit of CRR, sale of government securities. Now many of you will think, sir, this is not possible, this is possible. This is the best answer. This can't be there. Already you have a loan and again you are giving loan. The answer is all of the above. All of the above. Why? Here, giving additional debt to non-government sectors. What do you mean by this? Because of this you earn interest. If I give it to private company, the private company will give me interest. So that will become my asset. The asset of the bank means what? In the long run, it is the asset of RBI. Every bank is, after all, what is every bank? your bank, my bank, any bank. What is that bank? Every bank is actually the part of RBI only. RBI distributed all these banks act as the agent of RBI, isn't it, for money supply? So this becomes my asset, bank's asset. So this becomes RBI's asset. This becomes government's asset. Increasing the limit of CRR, right? If I increase the limit of CRR, RBI increases the limit of CRR. What happens? The cash flow, the flow in the society will decrease and the flow with RBI will increase. Okay? The money flow with RBI will increase. So RBI will have more cash than more assets. Sale of government securities. Now, sale of government securities means, again remember, there should be the buyer for those securities. I'll sell, but if there's no one to buy, then what? I'll sell everything, but there's no one to buy. So, whenever you are selling any government security, there should be a buyer first. The answer is all of the above. Got it? The dash emphasizes the need for adoption of fiscal and monetary transparency by authorities. The dash emphasizes. Who emphasizes? Transparency by the authorities means World Bank, RBI, IMF, Federal Bank of US. Means who tells the world that your financial institutions, means RBI, central banks, should be independent? Who tells? Is it told by World Bank or RBI or IMF or Federal Bank? Forget it. See, this Federal Bank is out. RBI is also here. We are talking of world over here. RBI will not control the world. Either World Bank or IMF. Nothing. I have given you the hint. Yes. Many of us confuse this World Bank and IMF. See, this World Bank is a bank. It is not the authority. World Bank is just a lending bank, a normal bank, lending to various projects. Various good projects are there, roads, we see many boards in our state somewhere in association with World Bank, that finance is given. So that is just a lending bank. That is not an authority. IMF is the authority, International Monetary Fund. This fund, this IMF, controls various central banks also. They can give the directions to central banks. Okay, of course, they don't give the direct directions. They give it as a suggestions, isn't it? Which of the following countries adopted the Autonomous Debt Management Office for operational efficiency? Autonomous, kindly note this word, Autonomous Debt Management Office means their debt management is not handled by the central bank. It is an autonomous body. Okay, autonomous. Which is that? Australia, Germany, France and USA. The answer is Germany. Okay, Germany. Do you know one important part about Germany? You will have this question also. There, the bank is called as Bundesbank. Bundes. Okay. Do you know one important fact about this Bundesbank? This Bundesbank has got more powers in Germany than the government. Bundesbank, in our country, what is the case? Government has more power. RBI doesn't have that much powers. Okay, that many powers RBI is not having. If tomorrow government wants, government can take over the RBI. Simple logic. But here, Bundesbank has more powers than the government. It's a fact. Okay? So that's why they have this Autonomous Debt Management Office. Which functions form the core of central bank's operations? Core. What is the important part of central bank's job? What is the main role of central bank? Why should the RBI exist? Is it fiscal policy? Is it monetary policy? Is it banker's bank? Is it lender of last resort? What is it? Fiscal policy? Is it of central bank? It is, just now we discussed, it's of government. So this is out. core function. Core, what is the main role? Price stability is the main goal. Why should RBI exist? From the common man's perspective, you go on the road, ask anyone. Now, what will he be concerned about? He or she. He or she will be concerned about two aspects. One is price stability, means inflation, right? Inflation. He or she will be concerned about inflation, number one. Number two, jobs. Right? Jobs means GDP basically. Jobs equals to GDP. If GDP grows, then only jobs will grow. So what is the core function of any central bank? These two, growth and inflation. They have to mark the balance between the two. How do they make the balance between the two? They do it through monetary policy. They do it through monetary policy. Okay? Which of the following practices enhance transparency of achieving greater accountability? Greater accountability. So which will give greater accountability to RBI? Accountability means what? Responsibility. Asking, answerability. You answer. Why did the inflation go above 6%? Accountability. Publication of official reports. Publication of forecast of key variables. Reason for central bank decisions, and all of the above. Many of you are afraid of this, all of the above now, right? Many of you are afraid that no, all of the above. Not true. But the answer is all of the above. Okay? Publication of official reports. See, this will give an accountability to RBI. Suppose if RBI tomorrow prints a wrong report about GDP, who will trust RBI in the next report then? Right? Publication of forecast means if RBI says, we feel that the economy will go this way, this way, this way. We feel, and nothing happens. Who will trust RBI from next time? Reasons for central bank decisions, isn't it? RBI reduces the repo rate and it goes wrong. People will say, what is this? Isn't it? So that's why all of the above. Which of the following is a secondary objective of central bank? Secondary. Primary is that price stability and growth. What is the secondary objective? Public debt management, price stability, transparency, and economic growth. What is the secondary objective? Yeah. See this. First we already saw price stability, gone. So that is primary. Growth, gone. Primary. This is primary. This is primary. So now only two remain. Public debt management and transparency. So public debt management is a job. Okay. It's not the objective. It is their daily job. Transparency is the objective. You have to be transparent. Two things are very common and very important. Transparency and accountability. Both the things should go hand in hand. Right? So the answer is transparency. Read this. Transparency in this case could be defined as the absence of asymmetric information between the monetary policy makers and other economic agents with a view to reducing uncertainty. So transparency is why does transparency exist? Transparency exists because it should pass on the information to the common public from RBI. It should pass on the information, whatever is happening in RBI. Of course, not the secret matters or the serious matters, which are not concerned with the common public. So they should not be exposed. Otherwise, you will say, transparency, tell me what is going on in defense. What are your equipments? Where are you hitting? I am the public. I need to know. You need not know all the things. What is RBI doing? What will RBI do in next 2 months? Why? Will you increase the repo rate? Will you decrease the repo rate? RBI need not tell you all these things. Transparency relates to which directly affect your present situation. Okay? So transparency in this case of could be defined as the absence of asymmetric information between the monetary policy makers and other economic agents with a view to reducing uncertainty, right? Because transparency will reduce the uncertainty. When was the first time such an initiative was taken to strengthen the transparency? When was the first time it was taken? First time. 1994, 95, 96, 97. When was it taken for the first time? Yes. When was it taken for the first time? Think over it, everyone. It was in 1995. Transparency was brought in. This was taken as an initiative in 1995. Okay? Here, there are two parts in any organization's function, specifically of government or even the banks, any banks. Transparency and accountability. These two things go hand in hand. Okay? What are the benefits of holding stocks of government securities by central banks? See, stocks of government securities means all the government securities will be held. What do you mean by this? Government securities? These are called as HQLA, high quality liquid assets. Means government will issue the bonds and banks will purchase them. What is the use? Firstly, they are at lower rate. They are always at a lower rate, number one. Number two, they are easily sellable. Means I can sell them and anyone is ready to buy. Why? So I'll write it over here. See this. Number one, lower rate. They are always at a lower rate. Okay, then the market. Number two, easily sellable. Easily sellable. They are easily sellable. Number three, what is the third one? They are at lower rate. They are easily sellable. You can easily find buyers for the same. Okay. So that is one point. And they are also included in your CRR and SLR. CRR and SLR. Okay. They are the part of your CRR and SLR, government securities. So what is the use? What are the benefits? Backing of currency, monetary control, public debt management, all of the above. By the central banks, holding by the central banks. Why does the RBI hold these government securities? Now, when we say government securities, it doesn't mean only our government securities. Kindly note this. It's not only our government. RBI can buy the government securities of other countries also, subject to rating. It will not buy, RBI tomorrow will not buy the securities of Pakistan or Nepal or Sri Lanka or Venezuela or North Korea. It will buy the securities of triple rated, sovereign rating. So the answer is all of the above. Okay? It is a backing of the currency, right? Because after all, currency is in the hands of the RBI and ultimately government. Monetary control, isn't it? Monetary control. Then public debt management. Public debt management means the same which we discussed earlier. That notes, issuing notes. So the answer is all of the above. Got it? Conflict arises between central bank and the government if, when does the conflict arise? A, voters elect a government to create more jobs, but the central bank can keep interest rates high to stifle investment and consequently job creation. Means voters have elected government why? So that keep the interest rates, this more jobs. More jobs means what? The interest rate should be lesser. Here, kindly note, whenever your repo rate, interest rates are less, then only there will be more growth. If the interest rates are high, there won't be that much growth. Okay? So voters elect for more jobs, but central bank's objective is different. RBI's objective is, it has to keep the interest rates high. If they keep it high, only then others will invest. It's like the FD. If your bank keeps the FD rate high, then only others will come and invest in your bank. Same thing about FIS. FIS will come to your country if you have higher interest rates. So both are opposite of each other. Government's role and RBI's role, right? We have to maintain the balance. That's why we have that ISLM curve. RBI wants certain officer to stay, but the government wants the officer to be removed. Both A and B. None of the above. Which of them is true? Both A and B? I am seeing many answers as both A and B. Sir, kindly note, just now, means the point over here is, government will never interfere in RBI. Never interfere in RBI. Internal functioning. So, this situation will never happen. RBI wants some officer to stay, but the government wants it. Government never interferes in this. So, this is out. Okay? So, this question is out at all. Got it? So, this is out. This is in. Voters elect government to select more jobs, but the central bank can keep interest rates high to stifle investments and consequently job creation. Okay, so this is the real answer. Both A and B is not always the answer, kindly note. We are in the habit of both A and B, not always. Got it? Credibility of central bank becomes more important in times of high uncertainty, because whenever there is huge uncertainty, what is uncertainty right now? What is the present situation means? In many situations during the COVID or during any war situation, the credibility of RBI becomes is at stake. So, credibility of central bank becomes more important in times of high uncertainty, because A, it becomes more about specific policies and less about confidence in policymakers' ability to manage uncertainty. More about specific policies and less about confidence. It becomes less about specific policies and more about confidence. Okay, more about confidence. It becomes more about specific policies and more about confidence. It becomes less about specific policies and less about confidence. See, everything is whole game is more and less, more and less. Think now. It's a juggling game. So what is the answer for this? It's a juggling game. The answer is, it becomes less about specific policies and more about confidence. So answer is this, B. Okay, it becomes less about specific policies and more about confidence in the policymaker's ability to manage uncertainty, isn't it? People must have confidence. FIIs must have confidence. Your own people must have confidence in the banking system. Only then things will work, isn't it? What are the 5 pillars of central bank to ensure transparency? This question is very important. 5 pillars, many times asked in the question in the exam. Governance, policies, operations, outcomes, and official relations. Governance, government sanctions, operations, outcomes, and official relations. Governance, policies, operations, president's nod, and official relations. Governance, policies, operations, outcomes, and RBI governor's signature. Think everyone. Is it related to some president's nod or is it related to RBI governor's signature? It has nothing to do with it, isn't it? So this is out. This is out. Only 2 are remaining. Governance, policies, operations, outcomes, and official relations. Here, government sanctions. What is this government sanctions? Government is a different body and RBI is a different body. It has nothing to do with these two, are not related to each other. Answer is A. Governance, policies, operations, outcomes, and official relations. That is the main point. Okay? State true or false with respect to the accountability of the central bank. So state true or false. Okay. It is 1 and 2. Two questions are there. 1 and 2. Accountability with respect to monetary policy is measured by price stability. With respect to monetary policy is measured by price stability. Is it so? We have this credit and monetary policy always. Every 2 months we have this. So what does that policy give? Credit and monetary policy. It always focuses on price stability, inflation. Okay, so the answer is true. Inflation. Price stability means inflation. So this is true. What about the second one? Accountability with respect to financial functions and objectives is measured by the ability of the banks and FI's supervision. Financial functions, okay, with respect to financial functions is measured by the ability of the banks and FI's supervision, the supervision of RBI. So RBI's financial functions are dependent on the supervision. Financial functions and objectives. It is measured by the ability of the banks and FI's supervision. Means how does it supervise? How strongly it supervises? True. That is also true. Because if RBI has to perform certain financial function or task, many of us thought this is false, but this is true. If RBI has to perform certain tasks, it has to see to it that the credit and the money is passed on through the banks to the customers. So supervision is very much important. Okay? The first presidency bank to be set up was Bank of Bengal, Bank of Bombay, the Presidency Bank of Madras. All were established at the same time. This is quite a difficult one. This is quite a difficult one. Think over it. Which is the answer? Difficult one. This is really difficult. The answer is Bank of Bengal. Okay? Bank of Bengal. Kindly note. This was the first presidency bank. Here, remember, there were 3 presidency banks. Bank of Bengal, Bombay and Madras. All 3 presidency banks were then combined to form. These 3 were combined to form Imperial Bank. Imperial. Okay? Then Imperial Bank was later, after we got the independence in 1955, it was transformed to SBI. Okay? So the history goes back. Got it? Clear? Next. A major consideration given by British government in deciding on exchange rate arrangement related to facilitating remittance towards home charges. Here home charges means what? Now what is this concept of home charges in British government? Now why should we study British government? We need to study our system. Here, it's not that. We have to study all the central. Your subject is central banking. So central banking means not only our country, majorly our country, but other countries also we have to study. Right? So what is this home charges? A is payment in sterling for meeting the home expenses of the soldiers of the First World War. Second, payment in sterling for meeting the various obligations for covering the India expenses. C, payment in sterling for meeting the various obligations such as interest on debt, pensions, payments of war office, cost of government stores, etc. and all of the above. This was way back in World War situation. These home charges were introduced. Okay? What were these home charges? What were these home charges? These home charges means here, understand, this was a method of looting our country. Actually, it was a method of looting our country. How did British loot our country? Home charges. Payment in sterling for meeting the various obligations such as interest on debt, pensions, payment of war offices, cost of government stores. This is the right answer. But how does it relate to, see, this is out of the topic, but I'll take 1 minute. How does it relate to looting our country? See, these home charges were the payments of all these. But from where did this payment, this money come? This money came from trade. Where was the trade? They manufactured the goods in our country, means took the raw material from us, all that cotton, remember this? Cotton, all this rare earth materials, all they took from here, manufactured there, and then did the trade. And there the money had come. Means basically what had happened? They looted our basic raw materials. It was to the tune of 45 trillion, it seems. 45 trillion. That's why. Okay. So the answer is this. Payment in sterling for meeting the various obligations such as interest on debt, pensions, payment of war office, cost of government stores, etc. The RBI was inaugurated on April 1, 1935 as shareholders institutions, government institution, charity institution, trust institution. What is it? RBI was earlier what? RBI, when it was formed, was it a government body? Or was it a charity? Was it a trust? Of course, charity and trust are out. So these two are out. Only these two remain. So shareholders institution or a government institution. So it is shareholders. RBI was inaugurated as a shareholders institution. Got it? Rupee was linked to British pound sterling until the year. Very important. And you will be amazed. You will be surprised to know the answer. Rupee was linked to British pound until the year 1947, 50, 75, 91. You will be surprised. Really surprised. Many of us are thinking that 1947 we got the freedom, so rupee should be separated. But no, rupee was linked with pound till 1975. Till 1975 it was linked to pound. There was no relationship between the two, right? We had got the independence, so by 1950 it should have been removed. Let it be. Okay? Rupee value was determined with reference to a basket of currencies until, again, basket of currencies until it was 1991. Kindly note, 1991. Okay, basket of currencies. What is basket of currencies? Various currencies of the world. It was linked to various currencies. Pound, dollar, everything. Plus 3-4 more. Okay? Match the following with respect to the BR Act. BR means Banking Regulation Act, 1949. Huh? BR Act means Banking Regulation Act, 1949. Okay, this is BR Act. So kindly match. Part 1 relates to short title extent, form of business, suspension and binding up of banks, penalties, fines and cooperative banks. So A relates to what? 1, 2, 3, 4. Now we'll just match this directly over here. What is the answer? All of you, think. Part 1 relates to What does part 1 of BR Act give? Basic logic is this. What does BR Act is having 5 parts. Banking Regulation Act is having 5 parts. So what are these 5 parts? That is a basic question. So part 1 relates to what? Now all of you will think, 1 will not be related to 1. It will be definitely something else. So you will answer anything except 1. But the answer is 1. Part 1 relates to short title extent. Means it gives the definitions. Titles, definitions, everything. Part 2 relates to forms of business, suspension and winding up of banks, penalties, fines, cooperative banks. So, again you will think, part 2, 1 was okay, 1 was 1. 2 will be what? 2 will not be 2. So, you will answer anything except 1 and 2. But the answer is 2. Part 2 is 2. Part 3, suspension and winding up of banks. Means part 3 relates to suspension of and winding up of banks. Again the same logic. 3 will not be 3, either 4 or 5. And the surprising element in this question is all are directly related. Part 4 is 4, penalties, fines, etc. And part 5 is 5, cooperative banks. All are directly related, 1 to 1. 1 is related with 1, A is related with 1, B 2, C 3, D 4, E 5. Okay? So all are, kindly note this, part 1 will give short title extent means definitions. Part 2 will give forms of business. Part 3 will give winding up. Part 4 will give penalties. And part 5 will deal in cooperative banks. This question will be there in exam. Either anyone, here, they won't give you match the following. They may or they may not. They'll directly give which part of BR Act deals with cooperative banks. Part 5. Okay? LERMS, LERMS, involving a dual exchange rate mechanism was instituted in March 1992. Means what? What is LERMS? What is LERMS? Is it local exchange rate management system? Is it little exchange rate management system? Is it liberalized exchange rate management system? Is it loosened exchange rate management system? Two answers are obviously out. See, this little and loosened, these are out, isn't it? So this is out and this is out. Only 1 and 2. Local exchange rate or liberalized exchange rate. Think over it now. Is it local or liberalized? Think over it. Local or liberalized? So it is liberalized. Okay, liberalized exchange rate mechanism. Got it? One nation, one ombudsman combines which of the following ombudsman schemes already existing? So one nation, one ombudsman. This was brought in 2021. Okay? 2021. Now it combines which 3 schemes? The Banking Ombudsman Scheme 2006, Ombudsman Scheme for NBFC 2018, the Ombudsman Scheme for Digital Transactions 2019, and all of the above. Think. Now this you should be able to answer. This was there in your JAIIB also. This was there in your JAIIB also. So you should be able to answer this. Yes, the answer is all of the above. All of the above. All the 3 schemes were combined. Banking Ombudsman 2006, NBFCs 2018 and Digital 2019. Okay, they were combined now. All the 3 were combined to form this integrated. One nation, one ombudsman, or we call it integrated. The Royal Commission of Indian Finance and Currency, known as DASH, 1913, proposed the amalgamation of three presidency banks. Which were the three presidency banks? That Bank of Bengal, Madras, Bombay, these three presidency banks. So in 1913, they were amalgamated and formed Imperial Bank. So this Imperial Bank, what was that commission known as? Chamberlain Commission A, Fowler Commission B, RBI Act, and none of the above. So the name is, it's obviously difficult. Many of you might not be knowing. Those who have read it, it's okay. Otherwise, answer is Chamberlain. Okay? Chamberlain Commission. This commission gave the idea that merge all the three banks and form one imperial bank. Okay? Got it? Now kindly note, one important point you all must note, that when these banks were existing, when was it? 1913. So do you mean to say that other banks were not existing? They were existing. Central Bank, it was existing since long. So even Indian businessmen had their banks at that time. Okay? So kindly note, it wasn't that only these Britishers had their banks. Indian businessmen also had their bank. They financed Indian companies at that time. Central Bank was one of them. The Imperial Bank of India was formed in 1921 with the amalgamation of which banks? Simple. Three banks. Just now you saw that question. Bank of Bengal, Bank of Bombay, Bank of Madras. All of the above. Answer is this. All of the above. Okay? Answer is all of the above. The Royal Commission on Indian Currency and Finance, popularly known as what? Now this Royal Commission, what is the use of this Royal Commission? This Royal Commission gave actually the idea of RBI. Okay? This Royal Commission actually gave the idea of RBI. Means RBI was formed because of this commission. What is that commission known as but? What is the name? Let me see in the comment section. Hilton Young. Okay, Hilton Young Commission. That is the name of that commission. At establishment, RBI was specifically entrusted with an important promotional role to finance. So it was entrusted with an important promotional role to finance. So what finance? What did they want to finance? Industrial Revolution, agriculture operations and marketing of crops, both A and B, and none of the above. Surprising answer. Surprising answer. Surprising answer. Many of us think industrial revolution. Or some of us think, oh, both will be there. Agri also, industry also. So both A and B. Answer is not that. Answer is B. Agricultural operations and marketing of crops. This was the main goal of RBI when it was formed. Okay, when RBI was formed, it was formed for this agri operations. Okay, that was the main goal at that time. Okay. The RBI was nationalized on dash in terms of Reserve Bank of India Transfer of Public Ownership Act 1948. So when was RBI nationalized? Of course, not before 1948, isn't it? So the answer is 1949. Okay, then only that BR Act came in, isn't it? So RBI was nationalized on January 1, 1949. Got it? The core functions of RBI as laid down in the statutes are. So what are the main functions of RBI? What are the core functions? What does RBI do? What does RBI do? Why should RBI exist? Issue of currency, being banked to the government, including the functioning of debt management, banker to the commercial banks, and all of the above. In fact, there are more functions. More functions. RBI acts for issuing the currency because monetary is in the hands of RBI, except that coins and 1 rupee note. It is a banker to the government. So government has an account with RBI. Whenever it wants any loan, it will go to RBI only. Banker to the commercial banks. Okay, so this is called as banker of banks. All of the above. Okay. There are other functions also. Those are not given over here. Banker of last resort. Isn't it? That is also one function. Supervisory function. Those are not mentioned, but those are there for RBI. Okay. It was only in late dash that the rupee was delinked from pound sterling and its value was determined with reference to basket of currencies until 1991. When was rupee delinked? We saw one question that rupee was linked to pound till 1975. So obviously in 1975 it might have delinked, isn't it? Think of the answer. Think of the answer. Isn't it? So 1975. Up to 1975, it was linked to pound. From 1975 to 1991, it was linked to basket of currencies. Basket. Okay? And in 1991, it again changed. Got it? The RBI's responsibility as a banker's bank was essentially twofold. So what is the role of RBI as a banker's bank? Banker's bank means any bank faces some problem, it will go to RBI for money. So what is the twofold? First, it acted as a source of reserves to banking system and served as a lender of last resort in emergency. Second, and more important responsibility was to ensure that the banks were established and run on sound lines with the emphasis on protection of depositors' interest. Next, this is A. So A is obviously true. Don't even read B and C and D. Okay. This is banker to government. So this is banker to government is a different function. Banker to government is not related to banker's bank. So answer is A, isn't it? Answer is obviously A, isn't it? Next. In the initial years, banks were governed by, so banks were governed by which act? Indian Companies Act 1913, Banking Companies Inspection Ordinance 1946, the Banking Companies Restriction of Branches Act 1946, and all of the above. Very typical answer. Very typical answer. So in the initial years, the banks were governed by all of the above. Okay, it is all of the above. Banks were governed by all of the above. Got it? All of the above is the answer. A special legislation called Dash was passed in March 1949, which was renamed as BR Act in 1966. So what was that act called as, or this resolution called as, legislation called as? Banking Companies Act, RBI Act, Companies Act, the Banking Administration Act. Yeah. So what was it called as? BR Act. Here 1949 BR Act was formed, but it was not actually named as BR Act at that time. It was named as Banking Companies Act at that time. When it was formed, it was as a Banking Companies Act. Then in 1966, it became BR Act. BR in 1966. And this was in 1949. Okay? Got this point? The government discharges its payment obligation towards the fiscal operations through. Now, this is all ABCD. So, through what? How does the government discharge its payment obligations? Through what? Either by issuance of debentures, or is it issuance of demand draft, or is it bonds, or issuance of checks? Now this question is there in your book also. What do you mean by this question? This question actually means whenever government wants to give the payment to anyone, means suppose if he wants to give the payment to you, not to you actually personally, to somebody. So how will it do it? So these are all old methods here. Now government also follows the new methods, RTGS, NEFT. But these are the old methods. How does the government give it? Suppose if in the earlier system, how was the government giving it? Was it giving issuance of debentures? Discharge, kindly note, discharge of payment obligations. Means I want to give payment to you. How will I give the payment? Through debentures, demand draft, issuance of DD, issuance of bonds, regularly, on a regular basis. So the answer for this is, on a regular basis, government will discharge it by, very simple, same as you and me. What will the government do? Government will do it, issuance of checks. Normal. Nowadays, government also follows the new methods. Your DD, your NEFT, RTGS, of course, they will also follow. Right? But this is the basic method. Okay? Next one. The important factors contributing to monetary expansion are. So, monetary expansion. What do you mean by monetary expansion? Monetary expansion over here means you are focusing on monetary policy expansion. Means RBI wants to expand the monetary policy. So how does it do? Net central banking credit to the government, net foreign exchange reserves position, both A and B, none of the above. So how does the government do it? The important factors contributing the monetary expansion are, which are these? Yes, think over it. Is it both? Or is it only Forex? Is it only central banking credit to the government? Or what is it? See here, the answer is monetary expansion you are talking of. Whenever RBI is focusing on monetary expansion, it has to look at both the things. Number one, central bank credit to the government, how much the credit is given to the government here. Ultimately, whenever RBI wants to expand the economy means expand monetary base. Means it will reduce the CRR, it will reduce the repo rate. By this, what does it do actually? By reducing, what does it do actually? Whenever CRR is reduced, kindly note, whenever CRR is reduced, what happens? There is more money flow in the system. Means banks will have to give lesser money to RBI than in CRR. What do? They keep certain portion, right? So that much portion will be lesser. So what will the banks do with that money which they have extra? Even if repo, if the RBI reduces the repo rate, what will it do? Extra money will go to the banks. What will the banks do? In both reduction in CRR and reduction in repo, in both the things, one common thing happens. That is, money flows to the system, more to the public through loans. Because of these loans, what happens? If people get more loans, right, they will buy more. They will definitely buy more. So what will happen? They will buy more, GDP will increase, right? So GDP will increase means what? What happens by increasing the GDP? So government will tell the world, kindly note my sentences. Government will tell the world that, see, my GDP is growing up now. Okay? So as my GDP is growing up, I can give you better returns. So in that case, what happens? Government tells the world, my GDP is growing, I'll give you better returns. So government will issue the bonds to the world. Many other central banks, many other private agencies. Okay, and these bonds form the base and these are purchased by those other agencies. Kindly note, how does the RBI handle the government credit? How does the government bank, RBI gives the credit? See, the transaction is very simple, as you and me. Suppose if I want a credit, I want a loan from your bank, what will you do? You'll ask me, sir, give me some security, then only I'll give you the loan. RBI also says the same thing, give me some security, only then I'll give you the loan. What is the security for the government? Government doesn't have land. It has land, but it doesn't give land for RBI, for security. So government will give what? Government will give the bonds which are purchased by others. Kindly note, the bonds which are purchased by others, any other country, means central bank, some private company, anyone. Bonds issued by the government and purchased by others. So those can only be kept as a security. Sure, any bond issued by the government cannot be kept as a security with RBI for credit. That bond should be purchased by somebody. Only then that bond has a value. If I issue a bond and nobody is there to buy it, what's the use of that bond? It's just a paper. Got this point? So whenever RBI wants to give credit, it will ask for the collateral, which are the bonds purchased by somebody. Okay, government will issue it. Government will issue it how? In fact, RBI will only issue it. RBI issues the bonds on behalf of the government, but they have to be purchased by somebody. And then RBI takes those bonds which are purchased as a collateral. Got this point very clear? Okay. So next now. So central bank credit to the government. So as the GDP increases, the credit will also increase. Number one. Number two, net foreign exchange reserves position. So that will also go up definitely. If others purchase your bonds, they'll bring in money. How will they bring in money? They won't bring in money in rupees. They'll be bringing it in some other currency, dollar, pound, anything. So this net foreign exchange reserves. So therefore the answer is both A and B. Got it? See, the concept should be very clear in your mind. Okay? Next. What are the salient points of CBDC? Now what is CBDC basically? What is CBDC? Central bank digital currency. What is central bank digital currency? It is basically a cryptocurrency. Kindly note this, cryptocurrency. You all hear this na, scam, this crypto scam, that crypto scam. Many cryptocurrencies are coming. So even RBI has its own cryptocurrency. Now don't get afraid. Okay, it's nothing, not a problem as such. Here, crypto scams are always from the issuer side. Here, cryptocurrency or the blockchain technology. See, one thing you note, CBDC is basically cryptocurrency. You need to understand the basics of this. Cryptocurrency is not bad. Okay. Now I'll give you all the details. Cryptocurrency is based on which technology? That is called as blockchain technology. Blockchain technology. Okay. Blockchain technology. What is blockchain technology? What do you mean by this? Blockchain technology is basically called as distributed ledger networks, DLN system. DLN, distributed. Kindly note these points, very important one. Distributed ledger networks. Okay, network. So this is the whole logic of blockchain. Blockchain is not bad. The problem with blockchain is who issues it. Suppose if I issue the blockchain tomorrow, I prepare a blockchain. What is my trustworthiness? What is my trustworthiness? Nothing. I can close that blockchain anytime. But if RBI issues the blockchain, CBDC, then the trustworthiness is there. If some central bank, suppose Federal Reserve of USA, tomorrow issues a blockchain, so then there is a trustworthiness. If RBI issues a blockchain, then there is but it should be issued by the authentic source. Government of India issues the blockchain. There is a trustworthiness. You issue the blockchain. Who will trust you? I issue. Who will trust me? Nobody. So the problem is always with the issuer. Kindly note, issuer. Blockchain is not bad. Okay? Blockchain is not bad. What is bad is the issuer. Always the problem lies with the issuer. Kindly note this. Okay? Blockchain is never bad. Okay? Problem is always with the issuer. Okay? There is full technology of blockchain. It is called as BBAA system. How does the blockchain work? Blockchain works on BBAA system. What is BBAA? See this. It's like this. BBAA system. That is called as. What is BBAA? First is block. Any transaction comes, block. Then broadcast it among the members. Broadcast it among the members. Kindly note, all the members should know that such transaction has come, and they will check the trustworthiness immediately. Okay. Third is authenticate. All will authenticate. All the members should authenticate it. All the members should authenticate. And last one is add. Once all have authenticated, then the transaction will be added. Once it is added, it cannot be changed at all. It cannot be changed in any case. This is the whole technology of blockchain. So now, what are the salient points of CBDC or blockchain, you can call it? A digital banknote based on the distributed ledger. Central bank money is a liability of the central bank. What do you think should be the answer? I give you all this logic now. Now you give me the answer. What should be the answer for this? Yes. The answer is all of the above. Answer is all of the above. Kindly note, CBDC is the digital banknote. Here, understand the difference between digital banking and CBDC. Many of you might be thinking, we already have digital banking, so there also I transfer the money online. Then why do I need CBDC? There also I am doing online only. So why do I need CBDC? The logic is very clear. See this, understand this logic. Even though you transfer online in digital banking, but there is a banknote which is existing. Suppose let's say I transfer 100 rupees from me to you today. Okay, online. But kindly note, there is somewhere this 100 rupees note printed by RBI. Somewhere. Means tomorrow if you want, if I want or you want, we can go to the bank and take the 100 rupee note. CBDC means this is transferred online, that is okay. Same as digital banking. But there is no printed 100 rupees note. Everything is online. That is the main point. So the cost of printing the notes is almost 11%. 11 to 12%. That is saved, isn't it? So that is the whole logic of blockchain. So it is a digital banknote based on the distributed ledger. Already I have explained you DLN. Central bank money is a liability of the central bank, isn't it? It's a liability. It has issued the note. Instead of issuing a physical note, central bank will issue this blockchain, e-note. That's it. E-rupee is what? E-rupee is the same, isn't it? Got it? Move on. Clear this part. Type yes in the comment section. I'll move on then. In which country central bank does not perform the note issuance task? Means now in our country what do? RBI issues all the notes except that 1 rupee note and a coin. Except that everything is issued by RBI. In which country their RBI does not issue the bank note? What do you think? This is a typical answer. Singapore, Germany, India, USA. Type ABCD in the comment section. ABCD. Okay? It is, the answer is Singapore. Okay? In Singapore, the central bank, their central bank does not issue the notes. Then who issues? It's a government authority. This authority is given to the government. Okay? What is a Giro system? Now this question comes almost every exam. What is a Giro system? Check this. Think the earliest form of bank credit from RBI, the earliest form of credit fund transfers, the earliest forms of government bonds issued, and all of the above. What is this Giro system? The earliest form of bank credit? Is it so? See, the answer is this. Earliest form of credit fund transfers. Okay, it is basically a fund transfer mechanism. It is basically a credit fund transfer mechanism. Got it? So, see this. This was a method of transferring money electronically between bank accounts. So, same as this, as your NEFT RTGS, isn't it? Same as your NEFT RTGS. Got it? Next. Central bank autonomy and independence generally relates to areas. So which areas? So central bank should be autonomous. Autonomous means what? Autonomous and independent. Means what? They should be able to function on their own. Nobody should interfere in their job. Otherwise what happens? Like in China. If you see Chinese government interferes a lot in their currency, in their RBI, a lot. Their central banks don't have that much independence. Chinese government, whenever it wants, it decreases the yuan value. Whenever it wants. Okay? But same case is not with us. In our case, RBI is free to operate. So central bank autonomy and independence relates to which areas? Now, somebody might question, if RBI is so much free, then it will become a free tiger, then it can kill anyone. If it's that much free, government is not interfering, then is it answerable to someone or no one? Kindly note, RBI has been given the freedom, but they have been given the targets also. Like for inflation, if the inflation rises 2% above or below, then the given figure, government will ask the questions to RBI. Suppose if the inflation is 4%, target given by, suppose I am giving you, government gives the target to RBI that inflation should be around, let's say 4%. Now, if the inflation goes beyond 6% or below 2%, see, 2 below, 6 above, then RBI is answerable to the government. It's not that it's not answerable to anyone. It can work freely in its own work, but targets are clear. Okay? So, central bank autonomy and independence generally relates to which areas? Personal matters, financial matters, conduct of policy. Personal matters, instrument matters, conduct of policy. Instrument matters, financial matters, conduct of policy. Personal matters, financial aspects and instrument matters. So which one? Related to what? Think everyone. This question will be definitely there in your exam. Definitely. Okay? Definitely there in your exam. So the answer is personal matters, financial aspects and conduct of policy. A is the answer. A. Personal matters, financial aspects and conduct of policy. Now, what are personal matters? Personal matters means not like you and me personal matters. Some family problem, not this. Appointment of employees. Okay, that is the basic personal matter. Giving the promotions, all these things. Okay, so that is personal matters. Financial matters means you know now, financial aspects and conduct of policy. How to design the policy means this MPC committee that designs the whole policy. Government doesn't interfere. Of course, government will have a nominee in that MPC committee, but that is a nominee. That nominee will act like others. There are total 6 members in the MPC committee. Kindly note. Okay. The details will be given later whenever the question comes. So, RBI has independence in this personal matters, financial aspects, and conduct of policy. Got it? Next one. Personal independence of RBI refers to, now see this, just now I told you, personal matters means what? It refers to appointment and term of office, dismissal procedure of top central bank officials and the governing board, both A and B, either A or B but not both. So now, personal matters I told you just now, it relates to appointment of all the senior officers, okay, appointment and term of the office. So A is true. What about B? B should also be true because here RBI is an organization. If it wants to remove someone, why should it ask the government? After all, it's an organization in your bank. Suppose if somebody doesn't work properly or does some fraud, bank wants to remove that person. Will the bank ask someone? No. Directly it can remove. Same thing over here. So, both A and B. Got it? Financial independence of RBI relates to financial. Government expenditure is either directly or indirectly financed via central bank credits. Monetary policy of RBI. And both A and B in either A or B. Think. The answer is yes. Again, both A and B. It relates to both. Government expenditure is either directly or indirectly financed via central banks. And second is monetary policy of RBI. Okay. Now, what is direct and indirect finance? Directly or indirectly financed? What do you mean by this? There are two ways of financing. See this. Okay. One is via government will give the bonds to RBI. Just now we discussed sometime earlier. Government will give the bonds which are purchased by others and then RBI will give the loan. That is number one. Number one way. Second way is what? Indirect financing. If government has a gap and the bonds are not purchased by anyone, if government has a gap between the expenses and the income, there is a gap, let's say. Now it has to issue for that gap it has to issue the bonds to someone and those bonds will be purchased. But imagine, nobody purchases those bonds. Government issues the bonds but nobody purchases. But that gap is still there. That gap needs to be filled in. How will the RBI fill in that gap? That is called as printing of notes. That gap will be filled in by printing of notes. But remember, whenever you print the notes, you are actually devaluing the currency. So that's why RBI never goes for printing many notes. Only whenever it's required. Look at the policy of RBI. What is the policy of RBI? Credit and monetary policy. You see, every 2 months or 3 months, they come up with the policies. Here, the rule is 2.5 months, means once in a quarter. That is the rule. So RBI comes up with this policy and that policy is called as credit and monetary policy. First is credit, then it's monetary. Monetary means cash, notes. Credit means these bonds. So first always the market is of credit, then notes. If that gap still pertains, the gap is not filled in, then RBI will go for this printing of notes. Printing of notes is the last option. Okay? And next is monetary policy of RBI. So monetary policy of RBI means RBI will prepare its own policy, isn't it? Goal independence in terms of any central bank refers to goal. See here, goal independence means what is your goal? What is your objective? These objectives are set by the RBI only. Now you will say, sir, many of you will question this now. That you will say, sir, you are saying everything is independence, goal independence, then what? Financial independence, personal independence. Then the question is, why is the government there then? If RBI is doing everything independently. Sir, kindly note, RBI is doing everything independently, functions. Functionally it is doing independently. But the problem is, I'll tell you, independent. But the problem is, the main problem over here, I'll tell you. Problem, not a problem as such. Government gives the targets. Government gives the targets that see, you have to maintain the inflation in this range. You have to maintain this. Basically, it gives the target of inflation. It will never give the target of CRR or repo. It will never give this. Government will never say, you have to maintain repo rate at this rate. CRR at this. Government will say, you have to maintain inflation at this rate. For that, the tools are repo, CRR. These are the two main tools. So, government will give the target, and within those, by taking those targets, RBI can function independently. Government will then not interfere. You increase the CRR, you decrease the repo. That is up to RBI. Government says, I want the inflation at this %. That's it. Okay, got this point? So now goal independence in terms of central bank refers to goals are decided as per the governor of RBI, completely independent of government's fiscal policy. Completely independent of government's fiscal policy. Is it so? The central bank itself can set its own objectives from a broader set of policy objectives. This is B, A, B, C. Goals are decided as per the Finance Committee of RBI, completely independent of government fiscal policy. Is it so? Completely independent. Here, none of the RBI's policies can be independent of the government. They are always supportive. RBI is always supportive. Okay? So, the answer is this. From the broader perspective set of policies. Okay? This is the answer. From a broader set of policies. Got it? When the Department of Banking Operations of Reserve Bank of India was organized, when was it organized? अब ये डिपार्टमेंट ऑफ बैंकिंग ऑपरेशंस बैंक आरबीआई में कब बना था? चेक एवरीवन, हर कोई चेक करेगा कब बना था ये डिपार्टमेंट? यस, व्हेन वाज दिस डिपार्टमेंट फॉर्म्ड? यस, व्हेन वाज इट फॉर्म्ड? कब बना था ये? देखिए डेट्स, देखिए अगस्त 1945, जून 1945, जुलाई 1945 एंड सितंबर 1945. व्हेन वाज इट फॉर्म्ड? यस, check this everyone. Everyone try to give the answer. Was it in August, June, July या September? Very close. Very close. देखिए 1945 is common. Some of you might have thought 1945 we know it, but now the question is very close. So it was in, yes, it was in August 1945. Kindly note, it was in August 1945. ठीक है? Got it? It was in August 1945. Everyone kindly note this. This question might come in the exam. There are many questions which we will be covering. अगला, ठीक है? अगला question. Which of the following schedules of RBI Act 1934 contain the provision of paid up capital? Paid up capital कौन से schedule में है? Check करना everyone. Check it. Which of the following schedules? First, second, third या fourth? Which of the schedules? First, second, third or fourth? Yes, everyone. Try to answer, everyone. Is it first, second, third or fourth? Yes, it is सेकेंड शेड्यूल. ध्यान में रखना, सेकेंड शेड्यूल. आरबीआई के सेकेंड शेड्यूल में ये डिफाइंड है, प्रोविजन ऑफ पेड अप कैपिटल. ओके, which bank closure increase the power of RBI for speedy delicensing? Which bank closure means which bank was closed? Because of this, RBI got a major control. Pallai Central Bank, and this question was there in the exam. This question was there in the exam. Lakshmi Commercial Bank, Pallai Commercial Bank, and Lakshmi Central Bank. Think. ये क्वेश्चन आया था एग्जाम में. Yes. The answer is, everyone think. Many of you might have thought by now, Pallai. You might have remembered this name. But now there is a confusion. Pallai Central Bank or Pallai Commercial Bank? Pallai Central Bank. Again, Pallai Central Bank. How many banks were nationalized in July 19, 1969? 12, 13, 14, 15. How many banks were nationalized on July? You can take it directly 1969. Yes, how many banks nationalized in July 1969? Yes, what is the answer? Think, everyone. Yes, how many banks? How many banks were nationalized in 1969? Simple. Okay, it was? Yes, it was 14 banks. 14 banks were nationalized in 1969. Okay. When was the first board of direction constituted by Reserve Bank of India? This is very important, and this question has been repeated many times. June 18th, 1970, July 18th, 1970, May 18th, 1970, and April 18th. See, very close. Very close. Yes. When was the first board constituted by Reserve Bank of India? It was in June, July, May, April. When was it? June, July, May, April. Think, let me see, comments. When was it? June, July, May, April. July 18th, 1970. Okay? Which of the following schemes has transformed the banking system into social policy? Social policy. Social policy means it's a movement. Social policy means it's a benefit for all. SHG linkage, lead bank scheme, LRS scheme, and all of the above. Very important one. Think about it, everyone. Which scheme has transformed the banking system into social policy? Yes. What is it? Yes, which is it? Which scheme has transformed? Yes, it was LBS, Lead Bank Scheme. This was in 1969. Okay, this was in 1969. It was formed. And this scheme was a district level scheme. All the district means there was one lead bank in the district, and the credit flow to the agricultural sector was done through this LBS scheme. Okay. Next. Which of the following sections of RBI Act authorized to establishment of Agricultural Credit Department in Reserve Bank? Which sections allowed RBI to form Agri Credit Department? See, this department was formed in 1935 only. Means RBI Act, actually RBI was formed actually as for Agri Finance. So which of the following sections allowed this? Agri Credit Department, section 54, 52, 50, 53. Think, everyone think. Yes? सोचो सभी. Yes? The answer is 54. Section 54. This section allowed RBI to form, to establish this Agri Credit Department. Main purpose of RBI in 1935 when it was formed was for agriculture only. Okay? It was meant for agri. Okay? When was the first RRB established? RRB. Yes? It was established in 1974, 75, 73, 76. Think everyone. What is the answer? Yes? क्या है आंसर? First RRB was established when? RRB was the only banking system in which bank was first formed and Act came later. If you check RBI Act, Reserve Bank of India Act, 1934 RBI Act, then 1935 bank came. But here it's opposite. First RRB came, then the Act came. So first RRB was formed in 1975. And also if you want the Act was formed 1 year later, 76. RRB Act was formed in 1976 and RRB came in 1975. Okay? The state government and the registrar of cooperative societies appointed by the dash are the main regulatory authority for cooperative societies that are operating only within the state. Only within the state. So, what is the answer for this? Yes, what is the answer? This is quite easy one, isn't it? It is quite easy. What is the answer? Appointed by whom? Registrar of Cooperative Societies is appointed by whom? Is he appointed by RBI or NABARD or state government or central government? Who appoints this? Yes, who will appoint this? Who will appoint this person? Will he or she be appointed by RBI or NABARD or state government or central? So the answer is state. Okay, state government. State government appoints it. Okay. Registrar of Cooperative Societies is always under the domain of state government. Okay. How many tier levels does a rural cooperative credit society institution have? Means how many tiers are there in rural cooperative credit institutions? Check this. How many tiers are there? How many tiers are there? Yes, it is. What is the answer? How many levels, tier levels are there in rural credit cooperative institution? The answer is, what is the answer? 3. Okay, three levels. 3 levels are there. Got it? 3. Got it? 3 levels are there. Next, the duality of control over the cooperative institutions is a contentious issue. Contentious means very problematic. बहुत problem है इसमें. Means duality of control means what? Somewhere state government is also controlling the cooperative department and RBI is also controlling. That is called as duality. दोनों control कर रहे हैं. RBI भी and state government भी. That's why what happens, cooperative bank is like in a problem. यहाँ देखो, who like this. They are always in the problem. Duality of control, that is the main issue. The task force on cooperative credit system addressed the issue of duality of control over the cooperative institutions. There was the task force which was appointed. Okay, this task force was given the target of what? Of finding the actual problem of duality of control. So, what was the problem at that time? So, who was heading this? Who was heading this? Was it headed by Jagdish Kapoor, Tarapur, Narasimham, and none of the above? Who was heading it? This question is there. Many times it's there. Who was heading this? Jagdish Kapoor, Tarapur. Many of them I am seeing the answer is Tarapur. Answer is Jagdish Kapoor. Jagdish Kapoor headed this, okay, this task force. Jagdish Kapoor headed. Okay. Got it? The high default rate in United States subprime home mortgage sector precipitated the global economic crisis. When did the crisis occur? So when was the crisis formed? High default rates were there. Was it in 2007, 8, 9 or 6? Was it in 2007, 8 or 6, 7, 8, 9? When was it? Subprime crisis. All of you might be knowing this. Many of you were in the banks at that time, 2008. Right? Some of you might not be there, but you might have read it at least. So, when was this formed? The subprime crisis. What was subprime crisis? Anyone knows? Those who don't know, kindly note. What was subprime crisis? The subprime crisis was the housing finance crisis. Biggest ever problem. Biggest ever. Housing finance. Housing finance means, see, what was it actually? The loans were given on the basis of the credit scoring at higher rate to those who are having lower score. Getting this? Higher rate to those who are having lower score. Now, we also have this. Many of the banks give it. NBFCs give it. Somebody is having the lower score. Banks generally don't touch those customers. Banks say nothing doing. But NBFCs do handle these cases. Same crisis happened over there also in USA. That many companies gave loans of housing finance to those who are having lower credit score. Obviously, when the person is having lower credit score, it means what? That person doesn't have the capacity to pay. So obviously, all the loans went NPA. There was no return back. And because of this, the subprime crisis happened. Big, very big crisis. 2008 was a real, you check this on Google, it was a real meltdown. So, when was this? This was in 2008. Okay, 2008. Crisis happened in 2008. Okay. When was the Board of Regulation and Supervision of Payment and Settlement has been constituted? When was this Board of Regulation of Supervision of Payment and Settlement? See, payment and settlement. We want it for payment and settlement now. So when was this board formed? When was this board formed? Payment and settlement. 2003, 4, 5, 6. Was it in 2003, 2004, 2005 or 2006? Yes, it was in 2000. When was it? It was in 2000. Yes, it was in 2005. Correct? It was in 2005. 2005. This payment and settlement, this board was formed. Okay? Next one. A securities and insurance laws bills was passed in August 2010, enabling the government to constitute an Apex Financial Stability and Development Council, FSDC. Who was the head of FSDC? FSDC, sure question in the exam. Relating to FSDC, kindly study this. So, securities and insurance laws were passed in August 2010, enabling the government to constitute an FSDC. So, who was the head? Who was the header heading this? Yes? RBI Governor, Finance Minister, Prime Minister, Chief Economic Advisor, you can call it. Who was heading it? Don't put everything on RBI Governor. Otherwise, everything RBI Governor. It's not that. Finance Minister. Finance Minister was heading the Securities and Insurance Laws Bill, or it became an act later. It was passed in 2010. See, what is a bill and an act? When the bill gets passed in the parliament, at that time it becomes an act. So, this bill was passed in 2010, so it became an act, enabling the government to constitute an Apex Financial FSDC. So, Finance Minister was the head. Which of the following is not a feature of stable macroeconomic environment? Not a feature. Which of the following is not a feature of stable macroeconomic environment? Low and stable inflation, high growth, low interest, and none of the above. See, not a feature of a stable macroeconomic. Stable. Okay? None of the above. or which one? Think everyone. Think of it. Which of them is not the feature of a stable macroeconomic environment? Many of you will be thinking of none of the above, because many of you think that low and stable inflation, okay, high growth, growth is high, so it is good for the company, for the country. Low interest. So which of them is not the feature? Many of you are thinking this, none of the above. Answer is high growth. High growth. See, it is not the feature of stable macroeconomic environment. Why? Because if you are doing a high growth, any country is doing very high growth, very fast, like China, there is some problem, because you can't make a very high speed growth without as such, without this doing some macroeconomic problem, means a sort of here and there you will make something garbad, some garbad you will make it. So if you are having a high growth, any country is having a very high growth, definitely it will be facing the problem. So high growth is the answer, not none of the above. At the international level, the Financial Stability Forum, FSF, was set up by major industrialized economies to ensure that the countries avoid cross-border effects of their actions. When was FSF established? See, what is the logic of FSF? Kindly understand this first. Set up by major industrialized economies to ensure that countries avoid cross-border effects of the actions. Avoid cross-border effects. For avoiding the cross-border effects of the action means if some country does give some freebies, okay, give some freebies to its local economy, so it should not affect the other countries. Okay, so when was this FSF established? 96, 97, 98, 99. When was it? Think of it, everyone. When was the FSF established? It was in 1998. Okay, 1998 FSF was established. It was established in 1998. Okay. Getting this, everyone? Got it? 1998 FSF was established. Got it? Next. So that was a marathon, that was a session for you. Now before going, kindly देखिए कि सारे मैराथन जो है, अब तक भी मैंने देखा है कि आपने सभी मैराथन देखे, आगे के भी पूरे मैराथन, मोस्ट इम्पॉर्टेंट पेपर, रिवीजन सेशन, हर एक चीज देखिए। ये चैनल को सब्सक्राइब कीजिए, मत भूलिए सब्सक्राइब करना। आपके जो भी फ्रेंड्स अभी 26 में CAIIB दे रहे हैं या जे दे रहे हैं, उन्हें याद से बोलना कि अपने बैचेस स्टार्ट हो गए हैं अड्डा 24/7 पर, मिस मत करना। एंड यू ऑल्सो, इफ यू आर प्लानिंग फॉर सम अदर सब्जेक्ट, आगे कोई रह गया है तो आप डेफिनेटली अपना अड्डा 24/7 के बैचेस ज्वाइन कर लेना, मिस मत करना। ओके, बाय एवरीवन, बेस्ट ऑफ लक।